In London, Mark Mobius, who is launching a new career. We don't know why, but he's doing it. He's launching a new career with a really interesting fund. Mark, you will launch it into a new China. Secretary Mnuchin was on the other day. Secretary Ross was on yesterday. And you know what? It's all boilerplate. It's all scripted blather. Brief Mnuchin, brief Ross right now on what's going to greet them in China.
What's going to greet them is an incredible infrastructure that surpasses the U.S. in many, many ways. What you're seeing in China today is strides in not only technology, but infrastructure that is really going to shock a lot of Americans who really haven't been there and seen it. So I think this is going to be a game changer when they sit down to talk.
When it is a game changer, it is a game changer of the X-axis, Mark Mobius. The president's working on a let's get it done 1 week, 1 month, maybe to November, maybe to 2020. What is the timeline of President Xi?
50 years.
I think they're very patient. They're going to take their time to negotiate with the Americans to get the very best deal. But it's a one-sided race, so to speak. Because on the one side, you got China with one voice. On the U.S. side, you've got 200 voices. And, of course, the Chinese negotiators can take advantage of that. But I think the Chinese are going to be very laid back and very careful to keep the Americans happy. They don't want to create a war, that's for sure.
Mark, where do you see value in the emerging markets, and actually what could disrupt them? Is it trade tensions or just a too aggressive monetary policy from the Fed?
There's no question that, trade tensions, if they turn out to be that way, which I don't think will happen, will be very bad for emerging markets generally. Well, the world in general, but emerging markets. The interesting thing is that I recently came back from Washington. We were talking with the IVC about export-led growth. Well, that's over for a lot of emerging countries. The exports are not a big deal for many of these countries. It's now internal growth, and that's particularly true in China. So the end of trade exports for some countries is not going to be a big deal. And I think they can stimulate the economy by internal growth. So if you ask me which countries are you interested in, I'm interested in those countries where internal growth is fast. China, India, in some parts of Africa, in some parts of Latin America. If you look at Brazil, for example, big consuming country. And they can do a lot internally to produce goods that they actually consume.
Right, but how would that, I mean, if we're seeing a belligerent U.S. when it comes to, trade surpluses and all of that, could it touch other parts of the emerging markets apart from China?
Oh, definitely, no question. Interesting way it's going to touch these other countries is that if China, let's say, is shut off from exports to the U.S., they're going to have to turn towards other parts of emerging countries, particularly Southeast Asia. In order to do that, they've got to stimulate exports from those countries. So there's going to have to be a complete... And it's already happening, by the way. If you look at trade in Southeast Asia, the major trade partner is China already.
Okay, Mark Mobius with us with a terrific Asia perspective. Alan Ruskin, is a currency a tool for the Chinese? Is renminbi different than other dynamics in foreign exchange?
It has been a tool. I think it's much less of a tool. I think the Chinese, know that that game is more or less over. You can't really manipulate the currency weaker without the natural buildup of reserves, which then is a red flag to the U.S. Treasury and the administration in general. So I think that game is just about done. I think you can play at the margins in terms of opening up or closing up your capital accounts so that you hide some of what would normally show up in reserves. But for the most part, I think it's going to be a freer currency, a dirty float.
Dennis Gartman, what you do in your newsletter, your report every morning, you write it like at 1 a.m. or 2 a.m., some ungodly hour, is you bring history into this dialogue. This debate and the nostalgia that the president and Secretary Mnuchin will take with them is based on Nixon, Kissinger, and it even goes back to our nostalgia and our relationships with Douglas MacArthur a long time ago. Do we need to jettison that to get to a new dialogue with China?
What bothers me is that we still have this great idea that the United States is supposed to run trade surpluses with the rest of the world. We've been running trade deficits with the rest of the world for the past 50 years, and yet the economy in the United States is in better condition now than it was then. So the correlation is that the larger the trade deficit becomes, the better things are. And yet we will constantly argue that we should be running a trade surplus. How silly is that?
Kudlow's on the junket with Navarro as well. You and I have known Larry since time began. When does Larry step up and say, we need a free trade dialogue here?
What has bothered me is the fact that we're sending the most dichotomous group to China. We're sending Navarro and, as you said, Larry, two people on absolute opposite sides of the argument. I hope that Larry steps up and says, yes, time to let this currency freely float. I think that's what China intends to do. In the long run, that's what they will do.
We will continue here. Mark Mobius, thank you so much. Congratulations on your new effort as well. Mark Mobius with Mobius Capital Partners, based in Bermuda.
That's right.
What an honor. May I say, what an honor to have been on with Mr. Mobius this morning. This is one of my heroes, and this has truly been a real honor to be on the same program.